Well, good afternoon, everyone. It's a 1:15 here in the UK, so we're an hour and 15 minutes ahead of the American Open. As you can see, all the measures of the trend on vector-based US are down, and we are in the middle of a very, very strong sell-off. Market up 13 ticks yesterday, so it couldn't get up excuse me, anywhere near a 38% retracement. So if I have a look at the overnight market, that's the overnight market. That's that big sell-off that we had from CPI. This is an hourly chart, folks, and as you can see, it couldn't get anywhere. I won't even bother drawing in the 38% retracement. Clearly, it can do that today. It can get up there today, but nevertheless, this looking quite bearish indeed. And I was expecting it to break above 39.60 this morning to run the stop losses, and I wouldn't be at all surprised if it doesn't do that now. I've taken a small short position. It's actually a quarter position of my normal size at 39.46, just under that little red hourly candle, and I took that a couple of hours ago, well, an hour ago or something. The stop loss, however, is right up here because as sure as shooting, it's going to go blip. It's going to now that I'm in, it's going to blip up, take out the stops, and then fall. If it does that, I shall add to that position. So I'm short a quarter size in this. I have no idea whether it's going to be. So don't email me and say you got it wrong. I don't know what's going to happen next. If I did know what's going to happen next, I would mortgage up everything I've got and short it. But making decisions when you haven't got all the facts is a big part of this game. But anyway, I don't want to talk about the stock market today. I want to talk about this fellow. And this is the gold market, folks. And the gold market has been in the middle of this correction now for a heck of a long time, way back from since July 20 after this run up. So I'm looking at a monthly chart. Many people are arguing this is a double top, and of course they could be very well be correct. I'm going to point out an alternative view now, in that from this low, I see this as, I'm not sure whether that's wave 2 or whether this is a ABC, but nevertheless, this looks like a wave 3 of an Elliott pattern. This certainly looks like a flat correction of a wave 4. Now, it's always my theory, my plan is to be looking to be a buyer at a support level, because I can risk just a few points to try and make a lot of points. You always look like a complete idiot when the support doesn't hold, because everybody says, well, the market was falling and you were buying it. But I don't know any other way to do it. If you buy at the highs, well, your stop loss needs to be as wide as the number 27 bus to keep you in the trade, and your risk to reward goes to hell in a handbasket. So my 8-week stochastic, my 8-month stochastic is right down in the buy area. So it's far, far too early to do anything yet on the long side, but I'm actually getting quite excited about the potential of a trade long in gold at or around these levels upon confirmation, with a relatively small stop in relation to what it could do. And I've been at this now 40 years, and that's the only way that I've been able to be consistently profitable, is to not focus so much on hit rate, but focus on, as the Americans call it, an asymmetrical risk to reward ratio. It takes an awful lot of doing, because our egos and whatever's inside us pretty much just wants to be right on every trade. And if you've got an arsenal of books on your shelf the way I have, that's largely because you were hoping that this latest book would make you right in every damn trade. So just have a think about that. Let's go to a weekly chart now. And this is just cheap software. It's for Mahala. That's Zulu for free. You can see that the weekly chart is coming down, and you can see the support level. You can see that it's on weekly lows, which certainly will put the fear of God into most people about being a buyer down here. Now, on the monthly chart, the 8-week stochastic was in a mega oversold condition. That's a very powerful condition on a weekly chart, on a monthly chart. But on the weekly chart, we've got a pattern which is a double bottom and so far making a rising bottom. Now, a technician, and the South Africans who are listening in, if there's any, Dr. Clive Ruffy, who was a technician in South Africa, sadly no longer with us, always used to say that if he sees a pattern on an oscillator where you get a double bottom and then a rising bottom, Clive would always say that I've never seen that fail. Now, I'm certainly not making that prediction here, but that pattern from Clive has stood me in very, very good stead over the years. So we would need to see some form of turn here, which is corroborated, nearly got that right, by divergences and a mega oversold on both the weekly and the monthly chart. Now let's go to the daily chart. On the daily chart, I just love putting these time frames together, folks. And if I get rid of this, oh, David, if I get rid of this, I'm not much good at software. If you get rid of this, I made my first stash on the stock market in South Africa with a 3H pencil and a bit of graph paper. So that's also coming up with this particular pattern. Nevertheless, the market is falling, and that little bear flag that I spoke about, I think in a video last week, doesn't look that encouraging, and many people would say that it's got to, in fact, make this distance on the downside. The market is falling, 1683. There's nothing to do, but if I saw a reversal here, I would be tempted to go long of gold. That's still a long way away. Anyway, I wanted to try and do the video just to show you what I believe is the most important, and that is optimizing the reward to risk. Risking virtually nothing to make an awful lot of money. You don't have to be right that many times, but there's absolutely no confirmation of this trade as yet. And clearly, if that 1600 level, 1685 level goes conclusively, then I'm just talking rubbish. But it didn't cost me anything. So I am, to use a word first put down on paper by the late Van Thorpe, I am stalking a long trade in gold. I haven't done anything yet, and I'm currently short of the S&P 500 on a quarter position. I'd be happy if it falls from here now. Okay, I'm going to make some money, but I reckon in the next hour and a half it'll blip above 3960, and I'll get filled with a bigger position. If it falls from here, then I'll add to it as it falls down the page. So risking quite a bit at the moment. If it takes out these lows, I'll bring my stop loss just to about 39.65, something like that. So just remember, anything that I talk about on these videos, folks, although I may sound quite certain about the outcome, anything can happen. It only takes one Egypt in the world to completely stuff your thinking around. So everything has got a probability associated with it. If I knew it was going to happen next, then I would put every penny I've got into the market. But I don't, and that's why I risk 1% of my kitty on any one trade. Anyway, thanks very much. Bye-bye.